So here's a big question, guys. Should investors stick with the big cap tech names that have really worked well during the pandemic? Brand, I'm going to start over with you. Obviously, we've seen some strong performance from companies like Apple and, great consumer products there. But when you look at Netflix and Amazon, those have been more flat during the year. What's your opinion?
Our bigger positions are in the Qs and ARKK. So the Qs definitely, those big constituencies are Microsoft, Apple, Netflix, all of those names. Not only have those stocks done well in general this year, they've created incredible returns for investors the last 10 and sometimes 20 years. I think the consistency of those names, the FANG names, the Q names, the consistency of earnings is going to be with us for the foreseeable future. And so because I think people feel really comfortable around the consistency of earnings, people are going to want to continue to overweight those names. Now, how much does the market want to pay for those earnings? That's a different question. 2 years from now, does the market want to pay 38 times for Amazon's earnings? We'll have to see where interest rates are. But I'm in the camp that rates are going to stay lower for longer. And what I mean by that is a 2% cap. I'm not saying 125, but in that, where we are now to 2%. And that's a wonderful time for equities in general, but definitely specifically those growth tech names, I think continue to outperform. But do I think they're going to do the 20% return they've done for the last 10 years? Probably not.
Sarat, turn over to you. I know you own Alphabet. Alphabet trading at an all-time high, along with Adobe, a lot of other stocks, tech stock names, Comcast, our parent company, also trading at a high since 1972, actually. What's your opinion?
I think that there's nothing wrong with owning large cap tech. We own it. Like you said, Alphabet's one of our top 10 holdings. We own Comcast. We own Charter. We own a whole bunch of tech. What I worry about is that investors fall in love with certain stocks, the large cap, and they concentrate their portfolios all in these stocks. So it's not like, today the S&P is north of 22% in the large five. What I worry about is when investors put 70, 80% of their portfolio all in one sector and all, in 7 to 10 stocks. I think there's plenty of opportunity elsewhere. I'm not to say that you shouldn't be in those large cap tech, but there is opportunities in industrials, healthcare, financials. Have a diversified portfolio, because if we're wrong and just say that rates do go up higher, you're going to get hurt more on the tech side. So why not be balanced? Why not have that barbell strategy we all talk about? And also look for companies that are growing. I'm not saying don't buy companies that aren't growing. You've got companies elsewhere in other sectors that can grow. And if the economy does stay where it is, you could get other growth in other sectors. So that would be my one thing. But not to say I don't own it. I love Alphabet. I think some of the parts is greater than the whole, and the earnings are going to be great there.